Welcome to Investing in Identity. It is October 2022, and I'm Travis Jure, the founder and CEO of Liminal, joined by Dave Fields, partner from PTB Ventures. Welcome, Dave.
Thank you for having me back. I know we got a little deal to discuss in a minute here, so let's go to the board, right?
Yeah, exactly. We're gonna try to keep this as brief as possible, but Thoma Bravo, big one.
Yeah,
Everyone's talking about it, so we're gonna spend the next 10 minutes or so talking about it. So, Dave, obviously everyone's talking about Thoma Bravo right now, picking up ForgeRock. This is after the PingIdentity deal, after the Sailpoint deal. We covered Sailpoint back in April. And then, of course, Ping and ForgeRock since then. What's going on here?
yeah. So this is really an incredible sequence of deals that I'm going to try to get into and be brief about it. But like, it's really breaking some new ground, or kind of forging a new path as far as like the private equity investing playbook. So like, let's talk about this. So these are three companies which were all publicly traded as of, barely 6 months ago, right? So we've got three take private transactions now. So they're going public to private. Typically, these would be LBOs or leveraged buyouts. The first thing I want to highlight is that these are not LBOs. These are just buyouts. There's no leverage or credit involved in these acquisitions, right? So that 12 billion number, that's 12 billion of equity checks out of their funds that Thoma Bravo has written. So that is their funds, I believe their most recent funds are more in like the $30 billion range is what they tend to raise as far as vehicle size. So they're putting, as far as for a single fund, they're putting 30-40% into digital identity, which is really pretty incredible, right? So that's a big check, a major commitment. Now, why? So the question, I'm trying to peg the question of like, okay, why aren't they using credit to finance these deals, right? Typically, a good LBO candidate is a company that is probably more mature, has a relatively stable, but not, still has some growth, but is a modest grower, but has very stable sort of profitability metrics and strong free cash flow generation, which allows you to then apply some financial engineering, largely leverage and credit to enhance equity returns. Now, that's not possible here, right? So all three of these companies, well, Sailpoint is somewhat of a free cash flow generator, but still pretty marginal in its free cash flow generation, whereas ForgeRock and PingIdentity are both cash burners. They are both, right now, they are still in that growth phase where they are investing a lot in sales, marketing, and product in order to pursue revenue growth. Profitability is something that's really probably 5, maybe even 10 years down the road, right? So the profile of these assets is very different from what you typically see in private equity take privates. And so I think that's pretty interesting. $12 billion as far as an equity check. I'm still trying to do some of the analysis on it. Maybe I'll have this for next month, but I believe this is now up there on a consolidated basis as probably one of the biggest private equity checks of all time, right? So like financially, deal structure, they're really treading some new ground. Now, so the big question for me is why are they doing this, right? And you have three companies which are not, I don't think are the biggest or dominant player in any of the segments in which they participate. So if this is sort of like the buy and build or the private equity roll up, one of the very interesting things here is, can you take sort of the second player or the second leader in sort of a market segment, and can you combine three assets where the whole is then greater than the sum of its parts, right? That's when M&A makes sense. You've got both revenue and cost synergies, right? And so they're doing this because they believe that does make sense. And so that kind of, for me, brings it to kind of the core thesis behind these three investments, which is like, do you believe that both a diversified and integrated offering will actually outperform the individual assets themselves, right? And so clearly Thoma Bravo believes they can. Looking at it just as an outsider, I think it's a huge lift, right? Because you have three companies. Obviously Sailpoint's the biggest of the three, but they're all pretty big and mature in their own right. And now you've got to figure out how to invest in both sales and marketing and product, while also getting to profitability over some 3 to 5 year span. So to me, that's a big lift. And so this is kind of where I, as the financial guy, turn this back to you, Travis, and say, on the product side, on the business side, how would somebody go about doing this? And is this, well, before you get into the execution question, is it actually something that even makes sense theoretically?
Yeah, no, it's a really great question. And when they acquired Sailpoint, we all kind of took a step back and said, what other assets does Thoma Bravo have? And we kind of walked through how, kind of an IGA / privileged access management company kind of fits into their existing portfolio. But then they acquired Ping, and then they acquired ForgeRock. There's, these are all very good companies, to your point, but they're very different actually in terms of how they approach different things like SIAM and IAM. But what you're starting to see is, and if we go ahead and look at the landscape, ForgeRock, Ping, and Sailpoint are represented here in blue. So if you're following along on video, you can see that. But if not, that's privileged access management, IGA, workforce IAM, customer IAM, some authentication, and consent management. Right there, it's a nice grouping. And other companies kind of in that range are companies like Okta, right, with a very decent public market profile, but clearly the leader in the space. So what you've seen here is, if these companies are all merging together, right? If Thoma Bravo is going to create a bigger platform together with these 3 assets, you have a real contender against the market leader, which is currently Okta. If they keep them separate, well, I would be looking at some of the other assets Thoma Bravo has, like Imperva, Sophos, Exostar, Logarithm, and Proofpoint, kind of represented here in the orange, really on the other side of the landscape with network security, endpoint security, and UEBA, right? More of that fraud risk, cybersecurity angle. How would these companies really work together is what I would be thinking about. The fact that Thoma Bravo was looking at taking Darktrace off the public markets as well, and that deal fell through, tells me that there's still some work between the IAM, that identity security side, and the actual true cybersecurity, the more kind of fundamental cybersecurity side. Now, what makes me very excited about a potential roll up between ForgeRock, Ping, and Sailpoint is I can see these guys really moving down in the landscape. And this is represented by the green on the landscape. This is the identity proofing, the fraud detection and prevention, and maybe even the biometrics segment, right? You can see where you start to capture more of the consumer life cycle and integrate that into the customer journey, and then provide them with better experiences through your traditional, your SIAM type of workflow management. So if I'm looking at this and I am any company in any of these solution segments, I'm thinking Thoma Bravo has a plan here. And either I want to go talk to Thoma Bravo about becoming part of that plan, or I need to go figure out what is Thoma Bravo's strategy and how should I actually defend against it. That's really where most companies need to be thinking here. I've heard whisperings about other companies Thoma Bravo are talking to, and chances are they're going to continue to migrate south in the landscape, and therefore everybody that's building their product, their strategy, needs to have a defense or think about how to get in touch with Thoma Bravo, like I mentioned.
Yeah, I mean, I think it's from my perspective, look, this is incredibly exciting. The way I think about the deal, and now, so I wanted to come up with a prediction for this.
Mm-hmm.
And rather than the prediction, my prediction now is that this deal is going to be a Harvard Business School case study one day, right?
I like it.
And I say that because at first, when I was thinking about and prepping for this, I was thinking, this deal's either going to make a ton of money and it's going to work really well, because it turns out that software does enable roll-ups like this in a way that you couldn't do it in like the legacy sort of like brick and mortar or manufacturing world or industrial world. And this sort of like, you can do a roll up like this where you are putting together parts of relatively equal size, certainly compared to other roll up strategies where typically the base acquisition is 20 times or greater than kind of what you're bolting on, right?
Mhm.
So you can't really consider Ping and ForgeRock are not really bolt-ons to Sailpoint, right? And so
Right.
when I look at this, you're going to take these companies, you're going to combine them, they're going to emerge much stronger, much more dominant than like the Oktas of the world. Or and this is going to be something that could potentially go from being a $12 billion market cap company to something that's like 50 billion, maybe even bigger, or it's going to be a debacle and it's fail. So it's not that intelligent to say this thing is either going to work out or it's going to fail, right? Like that's kind of how things work in
That's
the
not
world.
where you're gonna land.
But I will say is that this is a very unique, you have to go back to what I said before, is like you have this we've been calling out for rollups in identity, saying it's very fragmented for a while and who's going to come along and consolidate it. Somebody's now trying to do that. But it really borrows from several different sort of, business school style playbooks, right? And so it's interesting to now see them integrated into one. And it's going to be interesting to look back in 5 years. I think this is going to be really one of those deals that defines the way the industry is shaped and the way actors behave for the next decade.
Yeah, I think it's a pretty good prediction. And I guess, kind of in that vein, my prediction will be that these guys integrate with they buy up or create some form of integration with identity proofing vendors, a large identity proofing vendor that can do KYC, DocV, and other regulatory, compliance kind of KYC related services. So that's going to be my prediction. So maybe we'll kind of check back in on this when they make their next acquisition in the next few months here, I'm assuming.
Yeah, I was going to say my prediction has, kind of this 3 to 5 year outlook. I think yours is more like 3 to 5 months. Just, look at the deal pace so far this year. So
That's right.
I got to imagine that, I wouldn't be surprised if January or February we're discussing the next deal.
Yeah. And with that, like I mentioned kind of at the beginning of today's session, we're going to be a little bit quicker, a little bit more pithy. This will be a deal that we're going to continue to follow, continue to track, and on our next investing in identity forum, hopefully we have something else to add on to this conversation. But until then, want to kind of highlight a few things to look forward to here at Liminal. The first is we have our New York City networking event at the Classic Cars Club in November. So you guys can reach out about that one. We are publishing our outside in report on identity and travel. And then later this year, we'll have a sneak peek for our members on our new liminal digital identity landscape. So very much looking forward to kind of going through all of those things. And just a teaser for the digital identity landscape, verifiable credential management, making a strong push. So, lots of good debate internally here. So with that, Dave, always a pleasure. Thank you for your insight here, and thank you all for tuning in.